Hi, this is James Shug at Westpac with the end of London Market Day report for Tuesday the 13th of March. Actually doing this report just ahead of the FOMC decision, but you won't be watching this video if the actual outcome is any different from what we're actually expecting. A bit more on that later. But after the London close, we saw reasonable gains right across the continent and in the UK, with the FTSE up 1.1%. The French market up 1.7% and the Germans up 1.4%. The main drivers of those gains, and indeed the pre-Fed 0.8% gain on the Dow, which is now at 13,068, the main drivers were the final approval of the Greek bailout late yesterday by EU finance ministers, a strong ZEW analyst expectations survey, the third straight significant gain in that series, which has meant that in 3 months it's wiped out the prior 18 months of decline. That index, however, the current component of that index is still running at recessionary levels, though, the levels that it was running in the first few quarters of the 2008 recession, but the expectations have improved substantially, and that gave the market a bit of a boost. The US data today was mostly positive, with retail sales in particular very strong, up 1.1% in February. The January numbers were revised higher. Core retail sales, excluding gasoline and autos, were up 0.6% in February, on top of an upwardly revised 1% January gain, revised up from 0.6. So we're getting a much stronger consumer spending story in the first couple of months of 2012 than previously looked to be the case. There was another rise in small business optimism reported by the NFIB, although just a couple of the components, intentions to hire and also economic expectations were softer in the detail on that report. They are the main points to make on the economic data today. What I would mention is we're just about to get the Fed decision. We're looking for them to upgrade their commentary on the economy a little bit. That is, probably the housing market, which was described as depressed previously, will be described as showing tentative signs of improvement from a low level, from a low base, and there should be some slightly more positive commentary on the jobs market as well. But in terms of their policy intentions, fully expect the Fed to stick with the keeping with exceptionally low rates until late 2014, which is what their previous message was. As I say, if the outcome is any different to that, I'll be redoing this video. Okay, so I've done equities. On the commodity markets today, a bit of a mix there. We've got gold prices down 0.3%, $1,694 an ounce. Possibly that's related to the less prospect of further quantitative easing in the US because of the strong retail data, which in turn means less prospect for inflation in some investors' minds, which pulls down the gold price. Oil up 0.6% today, $106.95 a barrel. Copper's up 1.6% today. Aussie dollars up a little bit, 1.053 against the US dollar. We've got the Westpac Melbourne Institute consumer sentiment numbers for March coming out tonight. The February numbers showed a rise back above 100. That means that pessimists are now outnumbered by optimists, at least in that February survey. Be interesting to see how the March numbers look, given RBA on hold, disappointing jobs numbers last week, and other factors that drive sentiment. So watch for that tonight, and I'll report on that and all sorts of other developments this time tomorrow.